Welcome to the House Lux Estate channel, your reliable source for all things investing. Today, we're taking a deep dive into a topic that's been making waves worldwide: investing in cryptocurrency. Crypto, as many of you know, is a digital or virtual form of currency, utilizing cryptography for security. It's an exciting, fast-paced world, but like any investment, it comes with its own set of risks. That's where we come in. Our goal today is to help you navigate these choppy crypto waters by highlighting some common mistakes that investors often make. We believe that knowledge is power, and by equipping you with the right information, we aim to transform these potential pitfalls into stepping stones towards your success. The world of cryptocurrency is vast and complex, but don't worry, we're here to guide you every step of the way. Without further ado, let's dive into the top mistakes to avoid when investing in cryptocurrency. Mistake number 1, failing to do proper research. Let's dive into this crucial issue. You wouldn't buy a car without first understanding its features, would you? The same principle applies to investing in cryptocurrency. Ignorance isn't bliss in this context. It's essential to grasp the ins and outs of the market you're entering. Understand the technology behind the cryptocurrency you're eyeing. Is it blockchain, or perhaps something more advanced? And what about the potential for growth? Does the coin have a solid use case? Or is it just a flash in the pan? Even the most glittering digital asset can lead to a poor investment decision if you dive in without doing your homework. The wild west of cryptocurrency is filled with stories of investors who bought into the hype without understanding the substance. Don't let that be your narrative. Remember, in the world of cryptocurrency, knowledge truly is power. Mistake number 2, investing more than you can afford to lose. In the world of cryptocurrency, the only thing certain is uncertainty. Its market is notorious for its volatility, with prices swinging wildly in the blink of an eye. This fluctuation can be a goldmine for some, but a pitfall for others. The potential for high returns is tempting, but the risk of losing your entire investment is real and should never be underestimated. It's crucial to remember that while cryptocurrency can be a part of your financial strategy, it should never be the backbone. Every penny you invest should be money you can afford to lose. Spare change, not your life savings. This isn't about being pessimistic, but rather it's about being realistic and responsible. The thrill of potential gain should never blind you to the reality of potential loss. Investing in cryptocurrency should never put your financial stability at risk. Mistake number 3, falling for scams and fraud. In the vast digital landscape of cryptocurrency, scams and fraudsters lurk in the shadows. They're like chameleons, blending into the crowd, waiting to pounce on unsuspecting investors. Some common types include fake ICOs, Ponzi schemes, and phishing scams. Fake ICOs mimic legitimate initial coin offerings to deceive investors into parting with their hard-earned money. Ponzi schemes promise high returns, using the funds from new investors to pay off the old ones. Phishing scams use fraudulent emails or websites to trick you into revealing your private keys or wallet login details. To avoid these, it's crucial to use reputable platforms and wallets to store and trade your cryptocurrency. These platforms have robust security measures in place to protect your assets. Remember, if an offer seems too good to be true, it probably is. The world of cryptocurrency is exciting, but it's also a jungle out there. Always be skeptical of offers that seem too good to be true. Mistake number 4, not diversifying your portfolio. Let's delve into this critical misstep that many investors make. The world of cryptocurrency is vast, with thousands of digital currencies available. No single cryptocurrency is a guaranteed winner, and each carries its own level of risk. Therefore, it's crucial to spread your investments among a variety of cryptocurrencies. This strategy, known as portfolio diversification, can help mitigate potential losses. Think of it as a safety net. If one cryptocurrency plummets, you might still find solace in the fact that others in your portfolio could be performing well. This balance can provide a buffer against the unpredictable nature of the crypto market. In essence, diversifying your portfolio is much like creating a well-balanced meal. You wouldn't only eat potatoes for dinner, right? You'd want a mix of proteins, carbs, and veggies. The same principle applies to your investments. A healthy mix can lead to a healthier return. Remember, don't put all your eggs in one basket. And finally, mistake number 5, neglecting security measures. In the world of cryptocurrency, safety isn't a luxury, it's a necessity. The digital nature of these investments makes them particularly vulnerable to cyber threats, so it's crucial to arm yourself with robust security practices. One such measure is two-factor authentication, or 2FA. This added layer of security requires not only a password and username, but also something that only the user has on them, such as a piece of information or a physical token. This significantly reduces the chances of falling victim to cyber attacks. Another common security measure is using a hardware wallet. Unlike online wallets, these physical devices store your private keys offline, making them immune to hacking attempts. They might seem like an extra hassle, but the peace of mind they provide is priceless. In conclusion, never underestimate the importance of security measures. Your investment is only as secure as the measures you put in place to protect it. Now that we've covered the top mistakes to avoid when investing in cryptocurrency, let's take a moment to recap and ensure these crucial points are ingrained in your investor's playbook. Our journey began with the fundamental error of failing to do proper research. Remember, with the wealth of information available at our fingertips, there's no excuse for not being well informed. Understand the technology behind the coin, check the credibility of the team, and stay updated with news and trends. Next, we highlighted the risk of investing more than you can afford to lose. Cryptocurrency, with its notorious volatility, isn't a place for your life savings. Always gauge your risk tolerance and invest accordingly. Remember, the golden rule of investing: don't put all your eggs in one basket. We then talked about the dark side of the crypto world, scams and fraud. From fake ICOs to Ponzi schemes, the crypto market has seen it all. Be cautious, verify authenticity, and never let greed cloud your decision-making process. The fourth mistake was not diversifying your portfolio. As we've said before, crypto is just one asset among many. Balance your portfolio with traditional investments like stocks, bonds, and real estate. Diversification is your hedge against uncertainty. Finally, we discussed neglecting security measures. Your digital assets are only as secure as your weakest link. Use hardware wallets, enable two-factor authentication, and never share your private keys. By avoiding these mistakes, you're not just protecting your investment, but also paving the way towards a more informed and confident investment journey. Every investor stumbles, but it's those who learn from their mistakes who truly succeed. Thank you for watching. Don't forget to subscribe to the House Lux Estate channel for more investment tips and insights. Stay savvy, investors!